and there's the Chinese trying to see how they reposition themselves in a world where America wants to go back into its own cocoon. Those movements have impact on us, and if they look at our economy and see that it's not really quite open, then investors will go to other more benign and benevolent economies. Egypt, if you recall, floated its currency late last year, and within a matter of weeks, I think they recorded about $3 billion of foreign direct investment inflows coming in to support our currency. And I can expect by the end of this year, their 36% devaluation effect might actually be halved, if not recovered completely. You also see that when major countries are thinking about Africa, they start talking about Cote d'Ivoire, Ghana, and sometimes avoid Nigeria completely, because these are the issues people are looking at, saying, yes, you're the giant of Africa, you have all this population, but we're actually extremely difficult. It's an extremely difficult place to work. And what we're saying is, if we don't step outside our comfort zone and look at what is happening at the broader picture, then we'll continuously be left behind. We talk about being the giant of Africa, but the whole of Africa is only 1.6% of world GDP. Nigeria, 30% of that, we actually only 0.6% of world GDP. That is really a dot. When you think about how money moves around and the fact that you have so many million Nigerians that need a source of livelihood, it then becomes critical that you reform all the critical sectors so you can have investment come in and begin to change the lives of people.
But you see, there's also been this change with regards projected growth. Correct. For Nigeria. So IMF has revised this, World Bank as well. The federal government is projecting 2.5%. So there must definitely be something happening somewhere that is giving this new impression that 2017 is going to be a very deciding year for Nigeria, and in 2017 we expect to see this form or this much of growth.
Yeah, but we are projecting that 2016 will have done a negative growth of 1.6%. Remember, we're in a recession officially, and this is coming off of something like 4% the year before, and prior to that we were doing above 6%. With a country that has its population growing at around 3% per annum, even if you do 2.5%, you still are not making enough money for people to maintain where they are, because as more people are coming to the country through just expansion, then there are just fewer resources. Now, if you think about the endemic poverty that already exists, where there's millions that are below the sort of the food chain, and you clearly see that all those projections may not be really anchored on reality. We've also seen, if you think about the government's capacity to meet its own budget, then it also is challenged. If I look at the budget for this year, the only number that we are comfortable with is perhaps their oil revenues. They've assumed a benchmark of $42.50, which is below the market today, which is approaching above $55. They've also assumed a production capacity of about 1.8 million barrels per day, on the assumption that there'll be 2.2 million barrels per day. Sorry, excuse me. But that's on the assumption that the Niger Delta region will be more stable, and then but all of those will suggest that there will be capacity for them to make more money than was projected. But if you think about other revenue, other sources of revenue, taxation in particular, we don't see that the Nigerian companies are in that cycle where they've come out of the rut of 2016 and begin to see profits happening in 2017. So there could be difficulty. Then put that in the context of an election cycle. This year, 2017, is perhaps the only full year left for the government to make any major reforms. By 2018, they will be all neck deep in politics, and so they will not be able to do anything decisive. So if you really want to do something, this is the time to do it. We've lost 2016, but I advocate they shouldn't lose 2017, because it would be really dire for the country as a consequence.
So what's AfriInvest? Because basically that's your own outlook on the fiscal environment. But what is AfriInvest's outlook on monetary policy regime in 2017? Hawkish or dovish?
We are dovish. We are mildly dovish, and that has also been highlighted by the MPC results yesterday. But we expect that the CBN will maintain rates for the first quarter, perhaps. By the time they see sort of the results of the first quarter, they may be convinced to kind of start moderating rates. because the inflation may have a base effect that will kind of begin to lower the number a bit. That's assuming all the variables are correct. So we are mildly dovish on that count.
But what are the consequences for the market? Because you see, of course, we are an emerging, market, and most eyes will definitely be on us.
Well, if you're in this position, then I think you may want to take a long position on longer dated bonds, because if you start start bringing down rates, those bonds will appreciate in price. So that's one area. We tend to have a more we're overweighted on the fixed income side in terms of our expectations for the market. So, but if you want more detail, then we'll be glad to obviously, provide our services to you.
Providing services. But then, don't mind me there. But then, taking a look at for the general, Nigerian citizens now, what's your outlook? Do you expect to see less spending? Or in line with the federal government's projected increase in fiscal activities for the first half of the year, do you expect to see improved spending?
Yes, there's so long as government comes out, and they did there was a bit of signs of life in the last quarter where some of the capital expenditure budgets started trickling in. If they can maintain that momentum, that will be helpful for the economy, and that will provide more liquidity for many Nigerians. But it still doesn't take out the fact that we are suffering from quite a high inflationary environment, which is double what it was at the end of 2015. We've gone from about 9% to about 18, 19% as of December. So many Nigerians will still find that their income cannot meet their expenditures. For those who live in the big cities like Lagos, Abuja, and Port Harcourt, people tend to focus on the dollar exchange rate and all the implications for that. If you have dollar expenditure in an environment where your naira income is shrinking, then that also has its own tensions. So it will still be a tough environment for the average Nigerian. I can't imagine any Nigerian that I've met, whether it's a billionaire or a laborer, that hasn't felt the consequences of the current recessionary environment.
Ike Chioke, GMD AfriInvest West Africa, thank you so much for coming on the program and sharing your perspectives with us.
Thank you, Harriet.
Well, Business Morning continues after now. Stay with us.